Major hurricane is about to hit the semiconductor stocks, guys. In this video, we're going to review the chart of Micron and combine it with the information on the options chain to help you understand how can you easily figure out a market top based off the chart and the information on the options chain. So without further ado, it's clearly that Micron's been in a pretty magnificent uptrend, and especially during the last earnings report, what's notable, it had almost like a 20% move, which it never does that. Historically, MU is the type of stock that's been trading like around 40 and 60 for like quite a bit of time, and normally the 20% moves in it have been to the downside. So there's been a major outlier, and considering this information, it would be important to see what the market really thinks about the size of the move going into this earnings report. So we're going to glance at that in just a second. But before we proceed there, I wanted to point the attention to this part of the RSI. Basically, the price action proceeds higher, but the RSI is lower in relation to this prior area right here. That is a case of a bear divergence, telling you that the upward movement, the upward trend is shifting. And today is going to be a great confirmation that that trend indeed has shifted. Elvis has left the building, and from a highly bullish trend, all of a sudden, a lot of market participants are going to get caught off guard because the next move in this one is lower. Now, it's also important to take a look at the context, such as other stocks. For example, Nvidia, which we've nailed accurately the top within $1 off the top right here last week. And we pointed out stocks like AVGO were set up for a major drop. Now, notably, as I'm pulling up these stickers, so AVGO now, since we've predicted the top accurately right here, guys, it's been doing nothing but accelerating to the downside on volume that is also on certain days have been accelerating to the upside. Combine that with the bear cross and the MACD right here. The show to the downside is just beginning. Now, it does not necessarily mean that intraday some of these stocks are not able to move higher. As a matter of fact, those bounces are highly welcome, especially if you are a short seller with a ton of experience like we are here at 13 Market Moves. Those bounces are to be shorted. So look at the similarities in the structure here. Something drops close to all-time highs on accelerating volume with the bear crosses. Okay, that is not something you look forward to buying the dip on, even though some will argue, but look, but it's close to this moving average line right here. It's not going to break it. Soon enough, you will find out that it will break this level. So take a look at some of the other darlings, such as SMCI. Okay, and you're going to see that even though a lot of participants are expecting it to move higher from here, exactly the opposite is likely to take place. Now, this is a trade we've caught at $1,000 level last week, telling you that it's about to fucking reverse. And sure enough, you're looking at 822 price on SMCI, but it will move lower. And very similar configuration as the price moves higher right here. As you can see, RSI was shooting to the moon here in relation to this move, and so that's similar conditions that I have just pointed out to you on the chart of MU. So you know what happens next with SMCI after bear divergence, after accelerating volume, when it sells off to when it moves to the downside as far as price action. This is your largest size volume bars on this chart. Also, the break right here on the cross on the MACD, it is a bearish crossover, similar to the one I've pointed out on the other two charts. Now, let's just go ahead and take a look at a couple of more. AMD, okay, very bearish chart, about to go to the 147 level. So everything that I have described is remaining true for the entire sector. So now you know, okay, it is not just the MU stock that has a very similar formation, but a lot of other stocks. Now we're looking at TSM, Taiwan Semi, same stuff, bear divergence on RSI, at top, acceleration in the volume on the sell day. Okay, all these are very bearish signs, and if you can see, they've been pretty consistent. Despite of that, sometimes the stocks will make a pretty big move to the upside, but what happened here and here remains to be true, and it will catch on with the stock eventually in a very big way. And I think we're going to see all of these stocks that have pulled up the tickers for Taiwan, Semi, TSM, NVIDIA. Okay, all of them are going to be breaking down, at least temporarily, in a pretty severe way to the downside. So I wouldn't even touch NVIDIA until it gets to this level of 100, 103 with a stick. Guys, it's an easy short. Look at the crossover right here on the MACD. It has crossed and it is progressing with the speed of light to the downside. So those of you, guys, you would be shocked how many messages I got yesterday. Look, Leo, NVIDIA, it's got so many calls traded in the 130 strike, man. They're going to push it back to the 140. Guys, this is exactly the moment that I've described to you when the stock bounces already in a downtrend. That's the area for you to short it. And when you see a huge volume and strike like 130 and it can't break above that, okay, and the reason why it cannot do that is look at the volume, okay? It's very easy for a stock to move back to its level when you just had some severe sell volume followed by light buy volume. This is not a bull, okay? This is a bear, and this is a hardcore bear because pretty soon everybody that's been buying the dip from 140 to 135 to 125 to 120, okay, pretty soon we're going to be right here at 103. And what do you think that people are going to be doing here? Okay, so with that said, how's that relating to the chart of Micron again? And could Micron be the very thing that's going to push all these semiconductor stocks off the edge? The answer is yes. So let's do the simple math. Micron currently is trading at a level of 142. The recent high was at 158 and some change. Okay, we've gone over the bear crossover, we've gone over the volume, we've gone over the bear divergence, and now let's take a look at the options chain. Okay, guys, so the pull-up Micron chain, the first thing you want to look at is the expected market move. So market participants are currently expecting, when Micron is trading at 142 area, for the move to be in either direction to the magnitude of $17.13. So 142 plus 17 is 159, which is exactly the level. What level is this, guys? We just talked about it. It is the level of all-time highs on MU. So a simple math right here points to the fact that market participants currently are not expecting this earnings report to be the catalyst of why MU is actually going to break out to all-time highs. So one more time, let me pull up the chart so you can view it a little bit better. Again, 141, okay, 142 for price at $17. That puts you where? That puts you right here at a level of 158, 159, which was all-time highs before, as we looked at the context, all the AI-related stocks have tanked. Now, the market is also not pricing for this thing to drop below 120 or 125. Basically, for most of you that are trading options ahead of the earnings report, this trade is impossible to win with options if you place the trade on it today. Simply because when you combine the information here, guys, look at these, what these things are going for. So 140 strike goes for $8, which means by the time, okay, this potential 17 move could come in, you ain't making shit. Okay, basically, if the price was to drop to 125, okay, at the very most, you would be doubling your money. Never take a weekly options trade when your best outcome is when you're going to double the money. You should be looking at least at a 4 or 5x setup before you should be getting into any trade. And it doesn't mean that initially Micron cannot move higher and then drop. So let me tell you what that means. As far as the chart concerns, that means that after hours, okay, yeah, the earnings could be good, sure, but who gives a damn? Earnings do not dictate the reaction of the market to the earnings report. So what you really need to be focusing on is this level. So if Micron shares actually bounce to a level of 158 or close to it, give or take a couple of dollars, that would be an area to short it, okay? Especially if it happens on a lighter volume. Now, chances are, initially after the earnings report, shares are going to spike and shortly after that they will reverse, and you're likely to see this thing drop below 130 at some point in the after hours trading. Unfortunately, that move is not going to produce any meaningful profits for you. However, there is a much better trade associated with what I just described is about going to take place on Micron shares. And if you're curious to find out what that trade is, guys, it is a simple correlation type trade that anyone can take. And you can easily sign up to take this trade with the 13 Market Moves coach by going to 13mmtv.com or 13marketmoves.com. Again, to rewind everything that I have shown you in this video, guys, you go to the option chain, you look up the expected move, you look at the context of the chart, longer time frame chart, this type of time frame chart. So it always pays to look at multiple time frame instead of just looking immediately at what's happening on 1 minute chart or 5 minute chart. It pays to look at the context, not just of the chart that you're trading, but of multiple charts in the same sector. As I pointed out, all of them just recently set a top. They have a lot of bearish indicators such as volume, bear divergence on the RSI, def cross on MACD unanimously across the sector, which basically tells you it's not just Micron that's likely to suffer, it is the whole sector. That's what the charts are telling you, and that's what gives you a high probability entry if by a miracle it gets back to this level. Now, to summarize this, when your expected move, in this case it is $17, coincides with a all-time high on the stock, the market participants are telling you that they do not believe whatever the catalyst you're looking at, in this case it is the earnings report tonight, that is not the catalyst that will send the stock to all-time highs and propel it higher to new highs. So what the market participants are really telling you, the expected 17-point move to the upside or the downside is going to keep the trading within the range between 120 and 160. Okay, that's basically what the market is telling you. And that is normally not the type of setup you would want to see when you're trying to buy calls. So in this particular case, it would be a much more profitable trade to wait till options take depreciation. If the level is reached on lower volume, the level of 157, 158, that would be a perfect entry for a short, since most of the action is going to be taking place after hours, and sometimes the limit the ability to short the stock during events right after the earnings report is released. Your best probability to make a ton of money on this trade is take a correlation type trade or enter the trade the morning after the earnings report on a bounce. If you want more information about this, guys, get in touch with the 13 Market Moves coach. The correlation trade on this is very simple. It is beautiful. You don't want to miss it. Take it today before the market close. Let's roll.